What's up guys, this is Sean Tan and welcome to another episode of the iherng podcast, and today will be another Asking Sean segment and we will answer a question from Ronald Shen. Hi Sean, I am Ronald who recently came across your YouTube channel and I find all of your videos very informative and useful, but most importantly, no bullshit. Wow. Just a bit of background. I work in KL and I recently moved to Singapore for better career prospects. I bought my first apartment in KL few years back, 2016, just after I started working. And you might have guessed correctly, I bought a new launch project after visiting the show unit because it was convincing, and as a beginner I was very convinced without even doing much research on the numbers. It was a good idea to buy. The project I bought was the first phase of Ascenda residence of a larger development called Sky Arena at the Setapak area, which consists of a few condominiums and commercial components, as well as an integrated sports complex located right in the middle of the development. Having convinced by the size of the development and believing that it's the first mover's advantage, I proceeded to book a unit and took the plunge in excitement. My unit was completed 2 years ago, but unfortunately the market has dropped since my purchase and the current market value remains the same and even dropped slightly below the purchase price, and my current rental can't even cover my monthly installment, resulting in negative cash flows. Competition from the recently completed second phase right beside my development made the situation worse for both rental and capital appreciation, as you can imagine. Given my current position, I just wanted to have some of your thoughts. What are your thoughts on this development? What would be your strategy if you were to be in my position? Look forward in your response and thank you in advance for your good sharing. Keep up the good work. Thank you, Ronald. First of all, thank you very much, Ronald, for the email, the very lengthy email. And basically, I think what you're trying to say is that you buy this project 3 years ago, and now after you get the keys, right, the rental cannot meet the installments, and then the price even drop a little bit, and that is because you think that you buy in a master plan development, right? Then there's a first mover advantage and things like that. And the question you're asking is what would be my strategy if I'm in your position? First of all, unfortunately, right, a lot of youngsters now, not only to youngsters, but a lot of people, right, actually do more research after they buy in comparison to before they buy. Isn't it like weird? Because like there's this FOMO feeling, like the fear of missing out feeling, where you really think that, oh, if I don't buy now, right, I will lose money. And the story of being the first mover, right, has its advantage, right? This kind of stories, I think it has been a while since the Setia Alam story lah. So Setia Alam or Setia Eco Park, right, was one of the first projects that SP Setia that originated from Bukit Indah JB. They came to they came to Shah Alam. Shah Alam, and they developed this new environment that is very landscape focused, lifestyle focused, landed homes in between Shah Alam and Klang. And then the prices went double, triple across the years because of well-planned township lah. So there has been a story that everyone keeps in their mind, just like Setapak City back then as well. So like first mover, they buy now, then in a matter of years, 4 to 5 years, right, the house prices actually double, and that forms the story of being a first mover of a master plan. Right, you are the first person to buy the first launch of a township, right? You have the highest room for capital appreciation. However, if you look back into context, right, when these townships were launched, there's a few scenarios here. Number one, right, these are only the successful ones that you are actually talking about, and salespeople will always take these as the main story to tell you lah. So the first mover. What about townships that didn't went well? For example, if you look into Kota Kemuning, right, the Gamuda land took 12 years just for the commercial projects to actually be successful. Until now, I don't think it's still full-fledged at 15 years already. Number two is actually different context and different economic climate. What I mean is that during boom times, whatever you launch also can sell one. But maybe 2016 was one of the peak that when you buy, right, then suddenly when everything starts to settle, because in property there's a property cycle where there will be an oversupply, then there will be an absorption where the supply actually stops, then the demand actually absorbs all the existing supplies, because there's like 30,000 extra units in the market today. Then when suddenly the existing supply actually all absorbed already, then there will be another boom where demand and developers will start building all over again. But now this cycle is not as apparent, it's not as obvious right now. because there are a lot of developers in Malaysia. There's just too many developers in Malaysia, 1,000 over developers. The third thing is that everyone knows the theory. Everybody knows how to play the game, which means that now I just talk about townships in Klang Valley itself. I can easily name like 12 to 15, 20 even different townships. And what's the definition of township and mega developments? So between buying a township and buying a pocket-let development, right? It means that if I buy, let's say I invest in a condo where they promise me to have a very mega project in 12 or 100 acres, right? Then it means that there's more infrastructure that is upcoming that will fetch capital appreciation to my existing project. But on the other side, right, nobody thinks that all this land is actually controlled by one stakeholder. It means that whether they want to launch or not, whether they think that the market is right or not, is up to the decision of a CEO, of maybe the owner of the company. Logical thinking, I would say that like phase 1 should be the cheapest, then phase 2 should be actually complementing phase 1. So it will be in a higher price, because if I launch lower price, right, so all the investors in phase 1 will actually suffer in terms of selling price for their unit, right? Because phase 2 is actually cheaper, newer, better, right? But when times are difficult, desperate times, right, the developer really needs money. How? Whatever sold to you is sold, so I still need to make profit for myself. So indirectly, the developer will become your competitor. One more thing I would say that maybe 2 years is too short of a duration for you to determine whether you are making money or not, because that's not the nature of property actually. Property has always been a long-term investment, not a short-term. If you want flipping and all, right, I think those days are way gone already, because you are actually buying almost at the peak of the market. So only during boom times, like just now the property cycle, right, only during boom times where demand is actually more than supply, whatever you buy actually then will double or triple. But that only happens to landed, because landed is still the main appetite for Malaysians, especially for new apartments. After you get your keys, right, your valuation won't fetch the original selling price one. And just because you didn't do your homework also, because if you look into the surrounding, is there any units the same size like yours, the same facilities that you have, and what are their ongoing price? Because if you come to think of it, right, rental market, right, tenants, they will prefer new projects over old, but ultimately tenants will always look at rental rates. If both, right, have the same facilities and the same square feet, right, why should I actually pay more, right? Is your location better and things like that? So those are the research that you should do before you buy. And for the capital appreciation, I would think that the valuation will take time, because when they do valuation reports, right, the value of your building is actually up to market data, market transacted data, meaning of your size, of your unit size around the area, how many are actually being transacted. So if I were you, what are the strategies that I will adopt? Number one is, because since you're actually working in Singapore, I don't think that the bleeding actually will hurt you that much, because everything divided by 2.5, right? So maybe I will just hold for a little while, and right until the tenancy ends, I will try to work on the unit. It means that maybe I can put it out more like fully furnished, or actually do a designer home furnish to actually increase the rental returns, or maybe to actually wait it out. So maybe 3 to 5 years time, I will revisit this portfolio again, because now unfortunately, if you sell, right, you need to sell at a loss. That is also an option if you want to sell at a loss, right? I just want to cut losses and I want to move forward, but I don't think that makes sense for you right now, because as you say, a lot of things and facilities that are promised to you by the developer are all ongoing, and all those are due by this year, right? I would suggest just to wait it out a little bit and just take that monthly draw, right? Just take that as a lesson. No? I think that's the only way, unless that's why we call it fire sale. A lot of people fire sale is because 2 years I lose money. These are the things that no one will actually tell you. Buy property will actually lose money in the short term. That is also the risk between buying new properties and buying existing sub-sale properties. It's really uncertain. You are buying a piece of paper, then 3 years later, 4 years later, only you come and evaluate, right? In comparison to an existing sub-sale market, the rental conditions are actually existing. So I can actually work with data. That's why I always say that if you have the capital, right, if you prefer certainty, you can actually afford it, right? So now certainty also need money lah. Interesting times. I think that's all for this episode, Ronald. Thank you very much for your email, and I hope those strategies will help you out. Just to recap, number one, to wait it out. right? Really weigh it out, because since you're in Singapore, the monthly installment, you actually divide 2.5. Then when the tenancy ends, then only you will come back to actually, maybe you can get the makeover guys, just because I work there lah. Maybe you can get the makeover guys to actually help fully furnish your unit, or to designer furnish your unit. Number 2 is to actually cut losses, meaning like you want to fire sale, you sell now, but you will make a loss whether you want or not. This happens if you're really in need of cash lah, but then if you exit now, also not much cash to be gained. Number 3, I think some people may advise you to do refinancing. I don't think it's viable right now because of the market value. It's not going to be as par as the SBA price. Refinancing only can be done when your market price is actually higher than the amount of loan that you owe to the bank. It means that, let's say I owe the bank 600,000, my market value is 800,000, then I will refinance the difference. But refinancing is only 80%, meaning out of 500,000 and 700,000, for example, I can only take out 560,000, which is 80% of 700,000. So the extra 60,000 only can be used. So I don't think refinancing can be done as well in this current moment. And I think that's all for this episode. For those who still have any questions regarding real estate, do just email me at taniherng@gmail.com, or you can just look for me at iherng on multiple social media platforms. I think that's all. Thank you very much, and see you guys on the next one. Ciao.